These are 137 countries exploring central bank digital currencies, and they are heading in completely opposite directions. China has processed nearly $1 trillion in digital yuan transactions, while the United States recently banned its own development entirely. Europe inches toward a 2029 launch, somewhere in between, and early adopters in Africa and the Caribbean watch their projects fail with adoption rates below 1%. What we are looking at is not just a race to see who launches first. Countries are disagreeing about what money should be in the 21st century, who controls it, who watches it, and whether your government should be able to program how you spend it. Today, we are examining the specific projects in development right now, comparing how different regions approach this technology, and looking at what each model means for your financial freedom. Depending on where you live, the future of your money could look very different. China, the undisputed leader. No country has moved further along than China, and the numbers show exactly how far ahead they are. By June 2024, China's digital yuan had processed 7 trillion yuan in cumulative transactions, which works out to approximately $986 billion US. 29 cities across 17 provinces now participate in the pilot, and 2.25 billion wallets had been created as of September 2025. Here is how the technical setup works. The People's Bank of China issues digital currency to authorized operators, mainly state-owned banks, who then distribute it to regular users. Despite what you might assume, this system does not run on a traditional blockchain, and instead uses a centralized transaction system designed for high volume. This is where things get concerning. China already tests programmable money in the real world. During a 2023 pilot in Shenzhen, over $30 million US in digital yuan vouchers went out with built-in expiration dates, and 90% of recipients spent the funds within the designated period because they had no other choice. Other trials included spending restrictions limiting funds to transportation only or to specific geographic areas. Privacy operates under what China calls controllable anonymity, which means you can open a basic wallet with just a phone number and make small transactions anonymous to merchants. But every transaction remains traceable to authorities. The People's Bank of China stated in its white paper that digital yuan obtains programmability from deploying smart contracts. Here is the twist nobody expected. Despite all this investment, adoption remains stubbornly low. A former central bank official admitted in December 2022 that usage has been low and highly inactive, and the digital yuan represents only about 0.13 to 0.16% of cash in circulation. Most Chinese consumers continue using Alipay and WeChat Pay, which control over 90% of mobile payments. China has built the infrastructure for programmable, traceable digital money. Whether their own citizens actually want to use it remains an open question. The United States, the great refusal. Cross the Pacific, and you will find a country that took the exact opposite approach. January 2025 brought an executive order from President Trump explicitly prohibiting any federal agency from establishing, issuing, or promoting a central bank digital currency within United States jurisdiction. All ongoing retail central bank digital currency initiatives terminated immediately, and that made the United States the only major economy to formally ban such development. None of this came out of nowhere. Fed Chair Jerome Powell had already signaled reluctance during March 2024 Senate testimony when he stated, "We're nowhere near recommending, or let alone adopting, a central bank digital currency in any form. People don't need to worry about it." Republican opposition proved near unanimous on this issue. Representative Tom Emmer led the Anti-Central Bank Digital Currency Surveillance State Act, which passed the House 219 to 210 along party lines, and he characterized central bank digital currencies without privacy protections as nothing more than an Orwellian surveillance tool. Senator Ted Cruz warned a central bank digital currency could be used by the federal government to track its citizens. Democrats generally supported continued research, with Representative Maxine Waters arguing that a United States central bank digital currency would be designed to protect consumer privacy. Representative Jim Himes offered a more balanced view, noting there is potential for abuse and corruption, but also for extraordinary modernization. One distinction matters here. The United States did launch FedNow in July 2023 as an instant payment system for banks, but the Federal Reserve explicitly stated this has nothing to do with a digital currency. Canada followed a similar path in September 2024 when the Bank of Canada announced it was scaling down its central bank digital currency work, with Governor Tiff Macklem stating there is not currently a compelling case to move forward. Europe, the cautious middle path. Between these two extremes, Europe charts its own course. October 2025 marked the completion of the European Central Bank's preparation phase for the digital euro. If European Union legislation passes in 2026, pilots could begin in 2027, with potential first issuance arriving in 2029. European Central Bank President Christine Lagarde has urged lawmakers to seize the euro moment, while warning that US dollar-backed stablecoins represent 99% of the stablecoin market. The proposed design stands out for its caution. Individual accounts would face holding limits of 3,000 to 4,000 euros, which is much lower than the United Kingdom's proposed 10,000 to 20,000 pounds. A waterfall mechanism would automatically draw from linked bank accounts whenever a payment exceeds your digital euro balance. Privacy emerged as the top concern in public consultations, with 76% of Eurozone respondents rating strong data protection as essential. The European Central Bank committed that it will not have access to individual transaction data, but they have also been clear that full anonymity guaranteed by cash will not be a viable option. The United Kingdom's digital pound project, sometimes called Britcoin, remains in the design phase after a consultation that drew over 50,000 responses, which shows remarkable public engagement on the issue. The Bank of England made unusually strong privacy commitments, stating that neither the bank nor the government could access users' personal information nor control how households and businesses use their money. They have pledged that legislation would prohibit programming digital pounds to control spending. A final United Kingdom decision arrives in 2026, with the earliest possible launch around 2030. The House of Commons Treasury Committee published a report titled "The Digital Pound: Still a Solution in Search of a Problem?" The cautionary tales. Before any country rushes forward, they should study the early adopters. The Bahamas Sand Dollar launched in October 2020 as the world's first nationwide central bank digital currency, and today it holds only $2.5 million in circulation, which amounts to less than 1% of cash in circulation. Monthly transaction volumes hover around just $25,000. The central bank governor announced plans to mandate commercial bank participation after acknowledging that voluntary adoption failed completely. Nigeria's Naira launched in October 2021 to a nation of over 200 million people, and the results paint an even starker picture. An IMF working paper found that 98.5% of wallets in any given week have never been used even once. when the government tried to force adoption in 2022 by restricting cash withdrawals, protests, and riots followed. Jamaica's Jamdex struggled in similar fashion, with only 2,379 merchants enrolled and circulation stuck at just $1.47 million. The lesson stands clear: technology alone does not drive adoption. Without compelling use cases and public trust, central bank digital currencies remain curiosities that citizens simply ignore. The real risks to financial freedom. What are the actual concerns here, and what should people understand about each one? First comes programmability. China already deployed expiration dates on digital yuan vouchers during live trials. The technology exists to restrict when, where, and how you spend your money. Cornell professor Eswar Prasad warned at a 2024 World Economic Forum panel that programmability could create a darker world, where the government decides that units of central bank money can be used to purchase some things, but not other things. Second comes surveillance. Unlike fragmented commercial banking data, central bank digital currencies could give central banks real-time visibility into all transactions. Alex Gladstein of the Human Rights Foundation warned that in a fully implemented central bank digital currency system, governments could financially exclude individuals or entire groups with the press of a button. Third comes negative interest rates. European central bank researchers propose systems where holdings above certain thresholds could face negative rates, which amounts to a tax on saving. A Bank of Canada analysis noted that for central bank digital currencies to break the zero lower bound, cash would need to be removed or have its use restricted. Fourth comes exclusion. Only 59% of the world's population has internet access right now. Nigeria's experience showed how these systems can leave behind the most vulnerable. The INERA initially required bank accounts, which excluded half the adult population from participating at all. Who is winning the digital money race? That depends entirely on what you think winning means. China leads in scale and technical capability, but it faces an adoption problem even at home. The United States opted out entirely, choosing to rely on private sector alternatives instead. Europe is proceeding cautiously, at least claiming to prioritize privacy. Early adopters showed that launching a central bank digital currency is far easier than getting people to actually use one. The numbers tell this story better than anything else. 137 countries are exploring central bank digital currencies, but only 3 have fully launched. China has $986 billion in transactions on one end, while Nigeria has 98.5% inactive wallets on the other. Europe has a 2029 target launch, and the United States has a 2025 ban. Those represent 2 different visions of the future. These countries are not simply at different stages of the same journey, because they are heading in fundamentally different directions. The choices being made right now about privacy, programmability, and control will shape what money means for decades to come. The question is not just which country will win this race. The question is which vision of money you want to live under.